What's up, YouTube? Today is Friday, December 2nd, 2022, and welcome to today's video. I found this article on CNBC and says here 35% of millionaires say it's going to take a miracle to be ready for retirement. So let's dig into this article and I'll give you guys my thoughts. First, a quick disclaimer. I'm not a financial advisor, so please do your own research and consult with a financial advisor before making any investment decision or following any of the strategies or investments I discuss on this YouTube channel. This channel is for entertainment purposes only. If you guys are also into my content, please like the video, subscribe to my channel, check out my website, My Road to Wealth and Freedom. The link's in the description below. And let's dive into this. So yeah, 35% of millionaires say it's going to take a miracle to be ready for retirement. I can kind of personally attest to the fact that $1 million is just not, even if you have that in net worth, $1 million in net worth is definitely what it was, what it hasn't been, in times past. And the fact of the matter is, even millionaires are feeling the pinch of volatile markets, inflation. The cost of living is through the roof, and there's just a lot of risk, and probably a lot of pressure. It's actually hard to hang on to money. Studies have shown that, the more you make, the more you tend to spend. You get that sort of lifestyle creep. And I mean, we've all seen it. You get a raise, it's like, hey, I'm making a bit more money. Maybe I'll, upgrade from whatever car to the Mercedes or the Tesla, BMW, whatever it is going to be. You get maybe you upgrade homes. Yeah, so maybe you take more vacations. That's, a big part of the problem. My own personal views on a lot of this stuff is I feel um, a lot of people look rich, but are actually mired in debt. And it's funny, I was just talking with my wife earlier today about this. We have a decent net worth. It's conservatively estimated at about 7 million. Market value of a lot of stuff is probably about two and a half, something like that. But it's not like, a big portion of that, about, I'd say about half is just the value of our home. And when you think about that, everybody needs a place to live. And the fact of the matter is, moving to, selling a high cost locale and moving to a lower cost isn't always feasible. There's all sorts of different things, especially if you own a business or something like that. You can't just, especially a brick and mortar business, you can't just pick up and move to, the middle of nowhere in the country because it's cheaper. You just won't have that same ability to make money and to generate an income in that. The other thing is, it's just not what it used to be. I mean, the cost of living is through the roof, and asset prices across the board are at nosebleed levels. So when I was growing up, in the 80s, early 90s, and that it was, $1 million actually meant something. You could buy like 10 houses almost for that price. Now today, it's just one house you'll be lucky to get for $1 million. So let's just kind of put that in perspective. And my thought is this, so on paper, yes, we have a high net worth of, multi-million or 2 million or 1.5 million, whatever. But we don't feel super rich. I mean, we're regular people just like everybody else, right? It's just, that's the kind of, the millionaire next door, the people who drive the minivan, the 10-year-old minivan, the people who, whatever, for all intents and purposes, they appear as though they're just, just like you, the guy next door, like they don't have anything flashy, and but they actually have a pretty decent net worth, and they actually are worth millions, and that's just mainly a function of their lifestyle and savings habits and stuff like that. Dave Ramsey actually goes into a lot of this stuff about his study of 10,000 millionaires, how they They clip coupons, they shop at discount retailers, and they're always trying to find bargains and that type of thing. That is like the reality of the average millionaire, I'll say. Um, which in this day and age, I mean, it's not hard to see and to find, people, anybody who owns a home basically in southern BC or like Toronto, the GTA area. I mean, you know, uh, certainly out probably California and New York and stuff like that. Like you already are a millionaire. May not feel like it, and that's the problem. Because the big thing is, like I mentioned, with that lifestyle creep, is you know the amount of debt these so-called millionaires carry is astronomical. But I want to get into this article here. So fewer Americans feel confident about their retirement security amid persistent high inflation and volatility. Yeah, same with Canadians, same with Aussies and Brits. It's just the way it is. Even millionaires say their savings won't cut it. Now let's kind of dig into this here. A cool million is not what it used to be. That's for darn sure. There are more millionaires in the U.S. and globally than ever before. That's true. That's true. Everybody's a millionaire. And let me just pause there and step back and say it might also be a function of, the currencies, being inflated away and devalued, right? Um, so I'll just, a dollar back in the 80s when $1 million meant something is not the same dollar that exists today. In fact, a dollar from like 1982 has lost, I think it's lost like 75% of its purchasing power or something like that. So, to feel like a millionaire in 1982, you would actually need to have 4 million. So, anyway, um, having seven figures in the bank offers less security than it used to in the face of inflation and extreme market swings. That's true. And this guy says the mark is easier to attain, but it doesn't deliver what we expect, and that's true. You can have $1 million in the bank, and it just doesn't. You're not going to feel like this, especially when we have wild things in the stock market, like these huge swings. Uh, they feel less confident about their financial standing. Okay, even among high net worth individuals, 58% said that they accept they'll have to keep working longer, and 36% worry that retirement may not even be an option. Wow. In fact, 35% of millionaires said their ability to be financially secure in retirement is going to take a miracle. Wow, and that's a survey of 8,500 individual investors. Americans now expect they will need 1.25 million to retire comfortably as higher costs strain household budgets. Okay, that's a 20% jump from the 1.05 million they cited last year. But again, this is all funny money and stuff. When you really think about it, $1 million invested in, kind of, I guess, I don't know, a little bit of stocks and bonds, like kind of like a conservative balance type fund. I mean, you can expect to get between maybe 4 and 7% a year, um, over the long term, as like in income or in gains or whatever. And I mean, when you think about that, 4% is like 40 grand. Even 7%, that's 70,000. I mean, that's a little bit better. Um, you know, maybe you might be able to do it on that, but my point is that you're not living large. By contrast, if you had $1 million in the early 80s when interest rates were like 15%, I mean, you get 150 grand a year just for having your money stuck in a, interest bearing investment like a T-bill or a bond or something like that. I mean, that's a lot different than what we can expect today. $1 million may seem like a lot, but many people are surprised when they do the math and realize that 4% of 1 million is only 40 grand. Yeah, no kidding. This is usually quite a bit less than these individuals are likely used to living on. Yeah, I mean, when you think about it, the household income of the average sort of millionaire is probably, around the $200,000 a year mark. If you're an average, household, husband, wife working, you're getting about, maybe 75 grand each or 100 grand each. Which is also a little bit of misleading because I'm speaking for Canada here. In Canada, if you make like 100 grand a year or for 150 grand a year, I mean you're paying about 35-40% of that money in taxes. I don't know, maybe about 33% or something like that. It's actually quite significant when you think about it. And that's just in federal and provincial taxes. So it's almost like 40 grand in taxes there. So you think you're making 150, but you know, taxes, taking out taxes, and now you're down to like 110. Then you take away things like the CPP deduction, EI, and stuff like that. That might be another maybe 4 or 5 grand. I mean, now you're down to 105, and then you have other expenses too, right? There's maybe you have to pay for some benefits or whatever. I mean, I'm not trying to cry hard times here or anything like that. I realize a lot of people make substantially less, but all I'm trying to show here is that you know gross numbers are not net figures. And I mean, when you think about the average mortgage is about 4 grand a month or something like that. I mean, there's 50 grand going to your home or something. So now all of a sudden that after tax money of 100 grand, I mean, now you're down to, 50, and you need groceries, you need heat, and, cars, if you have a car payment, there's another. So my point is that, making 100 grand, 150, 200 grand, even as a household a year, it looks great on paper, but the reality behind that is that the actual net take home pay after all of these taxes and deductions and cost of living is actually not a whole lot. um, Better than nothing, but you're not living large. Okay, it's just the way it is. Um, anyways, so now he's saying that the 4% rule. So if you have $1 million, you take out 4% a year, you're going to probably run out of money really, really, really quick, especially with these volatile markets and that. So retirement rules are outdated. Yes, at the time, average 401k balance is down 23% from a year ago. And that's according to Fidelity Investments. That's like the biggest provider of 401k plans. So just think about that. Like the average 401k is not even 100 grand. I mean, wow. That's the nature of the crisis facing all of us today and in the future. Maybe you have 1 million, but you've taken a 20% hit on it. On top of that, prices are higher. Yeah, cost of living matters. Another survey found 50% now feel like they're behind in their retirement savings and amid persistent high inflation. People need to look at how much they have and take the time to do the math to see how long that will last. The name of the game is preservation. And I've been kind of going on about this the last couple years as I've seen an unsustainable rally off the COVID lows with stocks and bonds and real estate and all of this stuff, crypto, everything's just kind of gone to the moon. And, the name of the game, those who win the game of life and the game of financial freedom, it's not about all your gains. It's about preserving what you have, especially in times like these that are really, really risky and dangerous. Not only for millionaire investors, but for the average investor as well. For the little guy trying to get ahead, trying to do the right thing and sock a little bit of his hard-earned pay away or her hard-earned pay away. It's a dangerous game now. And unfortunately, there are so many different investment vehicles, so many different investment strategies, so many different ways to invest. Now, the ease at which somebody can start investing today is just really astonishing. I mean, you can just basically gamble. You can buy fractional shares. You can just throw it on. And I feel like that all contributes to this gambling mentality. I've read a lot about bubbles in the past, and I've read a lot of financial history. And one of the things, whenever there's kind of like a new way to buy or sell shares, whether it's like off the bourse in the streets and in the alleyways, in Amsterdam or Paris or London or whatever. It's always when kind of like the little guy gets involved. The Wall Street crash of '29. I mean, you had shoe shine boys giving tips. Everybody and their dog was getting stock quotes and putting everything they had into all of these names. And of course, we know that they were all just inflated and here huge bubbles. There was pump and dumps everywhere. Um, and now you can trade stocks or crypto or anything on just with the comfort of your mobile phone. You could be having a coffee at Starbucks and be trading. You could be sitting on a train somewhere, a subway or what. Like it's just it's crazy. And those are obviously habits that don't build long-term wealth, as we've seen with the GameStop saga and just everything, especially the crypto and stuff like that. So the name of the game is preservation, and how I interpret that, what I've done to kind of preserve what we've worked very hard to achieve, is just do the unglamorous thing of don't carry a lot of debt, and whatever debt you do have, that should be a major priority to get out of that debt. If you have car loans, get the cars paid off. Hold on to your cars for 10 years. Pay off all of your debt, including your mortgage. And that will give you the kind of security um, that will enable you to weather a lot of financial storms and severe financial storms. Because the number one, like the Achilles heel of everybody's finances is debt. And as long as you're working and you have income, it's not an issue. You can service that debt, provided interest rates don't go too high and you get squeezed there. But generally speaking, if you have an income, you can probably manage your debt okay. Um, the problems become when you have too much debt and there's a hit to your income, or the cost of carrying that debt soared astronomically. So many people I know, we've had record low interest rates for over a decade now. So many people have, their home mortgages just haven't been a priority. Hey, why pay off a 2% loan on your home, right? Housing goes up, 7% a year or something like that. The past 2 years, it's done a lot better. But yeah, it's hard to convince people that these gains that they see in their investments and even on your investment statements, it's kind of illusory. It's not real unless you sell and lock in that gain. Otherwise, it's just this kind of feel good wealth effect. Like, oh, my house is worth so much more now, so I can go borrow money and take a trip or buy that new car, or oh, my investments are up quite a bit. But that's not the way to play it. I've never been comfortable playing that game because things can go the other way, as we're coming to understand right now. Markets can drop substantially. I'm not talking a mere 20% hit like they're talking about here. Markets can go down 45, 50%. House prices can fall 35, 40% or more. It all depends. Typically in history, what we've seen is the bigger the bubble, the bigger the decline, and the more people it takes out. Um, so that's a big reason why I've always prioritized paying off debt. I've tried to invest, and I've always tried to put a little bit extra to pay down our mortgage, and because I recognize, I'm not interested in looking rich. I want to be rich or financially secure. And the only way you can truly achieve that, even if you're a millionaire, even if you're making, I don't know, $500,000 a year, and you're worth a bunch of, a multi-millionaire. These people go to sleep at night and they worry. They worry that they will lose it all. They worry, what if this all comes to an end? And you'd be surprised. I think, especially if you're just starting out in this world of investing and financial freedom and stuff like that, I think, honest to God, people would be really surprised at the number of high net worth individuals um, who feel that they don't have enough, who are worried that they could kind of lose it all, um, and that what their life would look like. Um, and for a while, I'll admit, I was kind of one of those people. I was just like, oh man, like you know, I was struggling to pay off the mortgage. I'm like, man, I just want to get out of this. At least at the end of the day, you own your own home and you're debt free. And that's something that not a lot of people achieve anymore. They don't see the value in becoming debt free. Although I suspect in the coming years they will have a greater appreciation for that. Um, but yeah, I still believe, the cornerstone of financial independence and financial freedom comes by being, debt free, in particular, owning your own home outright and not being a slave to the system. So, even if that means, I was paying off a, 2 or 3% loan, as I said, after tax or pre-tax dollars, that's about a 7% return. I mean, look at the average return of the stock market over a long term. You're probably looking at 8 to 10% maybe. Let's say 10 to 12, I think is their kind of rule of thumb. But look now, we might have mortgage interest rates of 7%. Well, on a pre-tax basis, that might be, 14% or something like that. I mean, and not only that, investing in the stock market is great. Yeah, it's easy to say, hey, on a long-term average, multi-decade, we're talking like 40, 50, 100 years even, you know, you're probably looking at about, 10% rate of return. And people are like, oh, wow, that's like, that's cool. But what you don't understand is that is over like a very long time frame, 40, 50 years, let's call it. That's, a lot can happen in that time. And as we are coming to learn in spades, is that life doesn't always work out the way you think it's going to. Bad things happen, it's just, that's life, and that's unavoidable, and you won't always know when those things are going to happen. So again, preparing for the unknown, setting yourself up to be in the best possible position in life to kind of handle what anything gets thrown at you. I always say, um, you know, I, I've never met a problem that having money made worse. And, for the average person, for the average, anybody making, under 200 grand a year will probably agree, you know. Oh, hey man, my washing machine broke. Hey, good thing we have, money, and we have, you know, that kind of, we have some savings, or, even just with our income, we can cover that. No big deal. Oh man, hey, my car needs a repair or something like that. It's $1,200 or something. Like, hey, no big deal. There's a lot of problems in life. Money's not the solution to everything, but for people who aren't like multi-millionaires and billionaires and stuff like that, yeah, having too much money can create all sorts of problems, and you have messed up kids and stuff like that. But I'm saying for the average, and what I'm really talking about is middle class people. I can say from my own experience, having money has never ever ever been a problem, and it's a good thing. Having money is a good thing. Um, Especially if you're a homeowner where a million different things can go wrong and everything is super expensive. You know, having that ability, having problems that aren't money related is makes life a little bit easier. So I want to move on. So preserving wealth preservation, and that's all about debt free is what I'm saying. So I'm put up. I'm on my website here, my Road to Wealth and Freedom. I just put out this December net worth. And let's kind of go through a little bit. You guys kind of know where I stand on the markets. I still think things are super risky. I'm well diversified. cash, some stocks. Uh, our exposure to real estate is literally our home, which is paid off. We're completely debt free, and we have hard assets like gold and silver, and a little bit of Bitcoin. Let's see. What did I want to go through? Yeah, so I just want to kind of go through another way to preserve wealth long term is with gold, silver, and possibly a little bit of crypto. Um, Also in here are things like a coin collection or collectibles. I'm going to make a video on collectibles because post lockdowns and the pandemic, a lot of collectibles. People were just searching for something that would retain value, and so the collectible market has really taken off. Whether you're talking about gold coins and silver coins, if you're talking about art, if you're talking about antiques, of course the sports card and sports memorabilia has just completely taken off. So I do want to kind of bring that in. There's good and bad to that, but what I'm trying to get is that if you're trying to build real long-term wealth, typically the long-term type assets that take us to the finish line and let us weather any type of storm are really kind of these hard assets. Um, Things like gold and silver, things like real estate, um, land, that type of thing, even like art, certain types of collectibles can be good long term stores of value. I won't really say they'll be good investments because when you're dealing with the collectible market, things go all over the place. So I'll just kind of leave it at that. But some of the things that I look at that I'm interested in. I've been interested in these old British hammered coins, gold and silver coins. It's just beautiful. They're not cheap. This is in pounds and stuff like that. But I kind of just browse. I've been a lifelong coin collector, and of course for gold and silver, you can check out Silver Gold Bull. They have all kinds of different things. They make it easy. I have a link in the description below. I'm an affiliate. I appreciate your support. If you find a good deal, they will actually price match. So that's actually really good. And yeah, so how do we preserve our wealth? Well, what I've done is I'll show you here. See, I've been, this year I've been buying some unique gold coins. I mean, these are all basically sold as bullion, but this is a Netherlands ducat. Shows a knight with holding arrows, 7 arrows, and that. This is a historical coin. It's really cool. I like that. This is an old English silver penny from the year, I don't know, 1200, King John. It's a short cross silver penny. Pennies were silver, 800 years ago. Of course, the gold Indian head. It's a classic. I really like it. It's iconic. It's something that not only has gold, about a quarter ounce of gold that will preserve long-term wealth, but it's also historically sought after piece. It's going to have that kind of appeal. And this is an old silver groat. I think it's about a 4 pence coin from the year 1500. Those are some of the things that I kind of pick up, and how I conceptualize financial freedom is yes, it's nice to have money in the bank, whether that's in savings, certificates of deposit, bonds and stocks and stuff like that. It's also to have income generating assets like dividend stocks, real estate. If you own your own website or YouTube channel and you're getting ad revenue and stuff, there's all sorts of benefits of passive income that I cover, and that goes a long way. I mean, years ago there were some times where some months I out of my own paycheck I couldn't really afford to invest a whole lot of money, and the bulk of my reinvestment was in the forms of dividends and rental income that was being reinvested, blog and website income, that type of thing. So I do feel that that definitely passive income is good to have. I don't think many people would disagree with that. So that's another thing too, right? Over your working life, if you can build up other sources of income while paying off debt, getting out of debt, it will just put you in a lot better and a lot less risky situation. If you lose your job, you don't have debt, and you have a lot of passive income, you kind of you can, I guess, pick and choose whether or not and where you would like to work. I mean, that's a great sense of freedom um, that people just don't seem to have these days. So, anyways, that's my video for today. I hope you guys enjoy these videos, and if you do, please like the channel, subscribe, check out my website, My Road to Wealth and Freedom. That website's been up for 8 years. There's tons of great articles that I wrote a long time ago that have stood the test of time. It's kind of like the evergreen content, right? These articles, how to diversify, how to become a millionaire. My coin articles, what are rare coins and that type of thing. Is gold a good investment? Is real estate a good investment? All of these different things. So with that said, have a great weekend, and I'll probably be putting up another video next week. Cheers.